Hello, good morning and welcome to my morning report analysis videos on Thursday 17th of November with me, Richard Perry, market analyst at Hantec Markets. We've got a relatively sort of mixed open really. There's an interesting sort of corrective move on the dollar which we're seeing in the last sort of day or so. And that's coming as this dollar index on the trade weighted basis actually broke out above 100.5 yesterday. That was just peaked out at that level and moved out above that to a new 13-year high, but it's just sort of come away again today. Now that's sort of come as the treasury yields have just started to settle and maybe starting to sort of fall back a little bit on both the 2-year and the 10-year. So a little bit of profit taking possibly coming through on the dollar. We're seeing the euro, which is bouncing. We're seeing sterling, which is bouncing. Dollar yen slightly lower. So there is a prospect of a little bit of profit taking maybe on these dollar trades that we've got. Now equity indices are relatively settled. You've got volatility which is settled down, but equity markets a little bit cautious today, a bit mixed on the European Open, flat on the S&P 500 yesterday, flat on the Nikkei 500 overnight. So nothing too significant in terms of direction on those markets, but you have had the oil price which rallied sharply on Tuesday. A little bit of consolidation yesterday and today, so just that's coming as the sort of news-driven headlines. Headline trading is going to sort of come back in again with the OPEC meeting just a couple of weeks away now, or less than a couple of weeks away. So it's going to be starting to get a little bit more choppy, I think, on the oil price once again. So that's coming through. But certainly the dollar, which is slightly lower today, could well sort of be the story that we look out for today. So what about all the economic indicators today? We're still coming through with a whole raft of numbers. And we're starting off with the UK retail sales, then we look at Eurozone inflation, then all the US data. But UK retail sales expected to actually improve to 5.4% on the ex-fuel year-on-year basis. And that would again be a strong number for the UK. Then Eurozone inflation is expected to tick higher mildly on the final reading of the October inflation to 0.5% today. US inflation is actually at 130. That is again on the headline basis expected to tick mildly higher to 1.6% today, but on the core basis staying at 2.2. Then into the afternoon we've also got the building permits data. So let's have a look. Scroll down. Building permits. 1.2 on building permits, housing starts 1.6. Again, they would be relatively in line with where we've seen the last sort of couple of months, really. Nothing too significant in terms of the changes there. And finally, we'd be looking out for the jobless claims at 130 as well, 257, again in line with where we've been. And finally, the Philly Fed, which is expected to be around 8 today. Mildly lower from last month, but still remains positive. So lots actually going on that's going to create a bit of chop on the markets today, and we could see a bit more volatility. But certainly the chart of the day reflects this strength of the dollar that we've seen in recent days. That's this dollar Swiss franc, but starting to pull a little bit lower. Now we've seen this breakout above 99.50. which was an incredibly strong breakout with several or 3 days of now closing prices above that level. But that's a long-term breakout. That is a really strong move. Sort of opens sort of 475 ticks. If you're going to take it from the sort of 475 area, which means that certainly we're going to be looking towards a test of that 10094 level, and that protects 10257. But very near term there could be a bit of a corrective move, and we're just seeing a little bit of rolling back towards parity. Parity seems to be a bit of a level today that the market is looking at. 99.50 is that long-term breakout level. 99.23 is the key reaction node from Tuesday. These are all sort of support areas. I think that sort of around that 99.50 area looks to be a decent sort of buying level. You could argue sort of back towards 99 figure arguably area would be sort of between 99 figure and 99.50 would be a decent sort of medium to longer term buying level as these sort of indicators just unwind slightly. Stochastics beginning to roll over, so we could see a bit of a near-term corrective move, but I think that would be bought into long-term, because I think this is a breakout that's sort of going with the dollar strength of what we've seen in the last sort of week or so, really, since Trump's victory. And I believe that's going to continue in the coming weeks. So any sort of near-term dip, I think, is going to be bought into. As I said, 99.23 on this hourly chart, but between sort of around that 99.50 breakout level, I think is a decent area to start thinking about long positions again. So I wish you good luck in your trading today. You've got resistance on the Swissy at 10057, which is now sort of protecting that 10094 level, which was the March high. But as I said, little corrections are a chance to buy. So I wish you good luck in your trading today.